Eddie Ghabour is back. All right, Eddie, you're giving us some drama this morning because you expect a huge drop for stocks in the next few weeks. You seem to think we're right on the edge. Why now?
So look, Stuart, our number one job as fiduciaries is to protect client capital at all costs. And we've been very consistent with the direction of this market and economy with our clients for the last 17 months. And the data doesn't lie. And right now, let's look at some of the data points we've shared with clients. GDP came in at 1.1% last week. It was supposed to be 2 from consensus after they reduced it, and we still didn't come close. So there's no doubt that the rate of change on the economy is going down faster than what the market's priced in. Secondly, the credit markets. We've talked about this endlessly. The credit default swaps on U.S. Treasuries are now above the levels of 2011 when we had our debt downgraded. That should be a major red flag and should not be ignored. Next are these bank failures. We just had another major bank fail, and it seems to get brushed under the rug as if there's not some type of risk to other things happening in the economy. And I think with rates as high as they are, they're not going down. You have to expect more banks in this same situation to unfortunately fail. And that's going to cause liquidity to dry up even more.
Okay, you made your case, but I'm still unclear about the size of this drop. You've often said we're going to get back to, I don't know what the low is, which would take the S&P 500 down to the 3,000 level. It's 4,100 now. You're expecting a 1,100 point drop in the S&P by what, July or August? Because that's almost a rolling crash.
That is, and our base case is for that new lows between that time period that you just shared. Look, in 2011, when we had this debt ceiling issue, the S&P dropped by about 17% in 2 weeks. Now, I'm not saying that's going to happen again, but we now have a tighter window on this debt ceiling than what we even anticipated. Because of the tax revenues being low, now they're saying by June 1st they need an agreement. They're not meeting till May the 9th. So between the 9th and the 26th range, they have to come up with an agreement. Both sides have to agree. What is the probability that does not cause fear within the market? So under the hood, there's a lot of things unfortunately going wrong. And I think err on the side of caution heading into this second quarter with all these problems is very, very prudent.
All right. You've said it before and you've said it again. Big drop coming. You made your case. Eddie Ghabour, you'll be back soon to back it up again. See you later. Eddie Ghabour, thanks very much indeed.